And joining us here at Post 9 today is KC CEO Darren Rebelez. Darren, it's great to have you. Welcome.
Thanks for having me, Carl.
Congratulations on this quarter. You can talk about virtually everything, energy, dining, but the consumer at large. What are you seeing and how does it fit with the results that we got?
Yeah, well, obviously we had great results in the fourth quarter and for the fiscal year, and great testament to our team and the 45,000 team members we have working in our stores and distribution centers every day, taking care of our communities. But with respect to the consumer, we see the consumer hanging in there, pretty resilient still across the income spectrums. And what we find is a little bit of behavior shift from lower income consumers. They're not stopping spending. They're just being more discerning about how and where they spend. And so we've seen good growth from lower income consumers as well as upper income consumers. And we benefit from a trade down in the restaurant space in particular with our prepared foods. And so as it's been well reported that restaurant prices have been very high, and we managed to moderate our pricing. And so we're starting to see traffic come into our stores as a really viable alternative to QSR.
Can you talk about to what degree gas prices are a tailwind right now? We usually don't see declines that we are seeing this summer in particular, right?
Yeah, normally, there'll be a seasonal uptick in the summer. We're starting to see a little bit of that, but not necessarily as great as it's been in prior years. But the retail price, average retail price, is actually a few pennies lower than it was last year. So I don't see it as really a tailwind or a headwind. It's really just kind of neutral. And when we look at the buying habits of our consumers with respect to fuel, they're not behaving as if fuel prices are high. We're selling more premium blended fuel, which is more expensive, less ethanol blended fuel, which is cheaper. So that normally means that the consumer isn't focusing so much on fuel prices, they're focusing on other areas.
One analyst says you're running circles around your competitors right now, especially inside the store. Why? What is it you're doing so differently?
Yeah, we've really focused a lot on fundamental operations. It really comes down to assortment in the store, innovation, and value. And what our merchandising team has done a fantastic job of really staying close to the consumer and dialing in that product assortment to meet the needs of those consumers. On the prepared food side, we had some great innovation. We launched a thin crust pizza platform about this time last year. It was really a nice tailwind for us. And more recently, a hot sandwich program, up 85% in the quarter. It's just phenomenal. And we actually took pricing. We raised prices. And so we rebuilt that platform, invested in quality ingredients, raised the quality of the product, raised the price a little bit, and we're actually seeing higher income consumers shift into that. But and then we've maintained that value proposition. So the three of those things have really helped out.
We just showed the map. I just wanted to reference middle of the country.
Right.
Potential for growth on the coasts?
Well, we're not targeting the coast right now, for sure. But just an anecdote, we got 2,600 stores in 17 states, but 2,000 of our stores are in only 9 states we operate in. So we have tremendous white space within our existing store footprint. And what we try to do is target our growth within the distribution radiuses of our 3 distribution centers. And so we leverage that investment in the infrastructure to scale our stores throughout that geography. So that's our first stop on the bus.
Is that white space mostly about Texas?
Well, Texas is certainly a big opportunity. We just entered into Texas recently with a 22-store acquisition. As you know, Texas is huge. So when you look at our store development, we tend to operate in more smaller towns and rural communities. If you take the I-35 corridor all the way to the Mexican border, it's nothing but Casey's country. So we're really bullish about Texas.
Your background is in, I guess, would you call it fast casual or dine brands, IHOP? Have you paid attention to that space as well? And are you seeing trade downs in that area for the consumer?
Well, I haven't been focused so much on their business, but we certainly see restaurants taking a lot of price. And, I think that's really a function of the fact that most of the restaurant industry is franchised. And so these, even though they're big brands, are smaller operators. And they're challenged with overcoming a lot of the inflationary pressures from the cost side of the P&L. And so they don't have a lot of levers to pull. They have to take costs. We're company operated, and we have 3 different businesses: fuel, grocery, and prepared food. So we have lots of different ways of offsetting those inflationary pressures, and we can keep that great value proposition on the food side, and I think that's what we're benefiting from right now.